What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Gosh, I say that 10 times fast. So I have some safe dividend stocks to buy. These are high yield real estate investment trusts. I'm going to do a dividend stock analysis on these stocks. They have significant dividend increases. And again, these videos are free for you guys. I always tell you guys, people are like, well, what about this video? What about that video? When are you going to post? Make sure you hit that notification bell. It'll pop up on your YouTube icon on your phone or your laptop, and you'll see the videos. I also make a comment in the community section, but these dividend stocks are very solid and they appear to be safe dividend stocks. And I really like these yields. I'll go over these stocks. I'll go over their portfolios and what they're about. And man, they are very attractive right now. So let's check these out right now. That first stock is Regency Centers Corp. It's sitting at $74.39. Its day range was 73.87 to 75.39. Year range is 43.49 to 78.07. Market cap is 12.74 billion US dollars. The volume is 756.31K. EE ratio is 38.23 with a dividend yield of 3.36%. Okay, and I always say this with real estate investment trusts, we need to look into what these guys are about. And, they're not jumping up too fast, which makes them an attractive real estate investment trust, especially against the S&P. If you look right here, the S&P has done better against these guys, but we need to look into the nitty and gritty of these guys. Let's check them out. So right here on their website, they are a total of 402 centers totaling 54 plus million square feet of retail space nationwide. That's attractive, but what type of centers? That's the important thing. You need to know a little bit more into a real estate investment trust. Like I tell you guys, with looking into ETFs, know what's inside of it. You need to know more what's inside of it, okay? Just because it has 402 centers doesn't mean anything. What if there's not a lot of security? What if there's not a lot of stability? Look what happened with EPR properties. They suspended their dividend. That was expected because what are they? Entertainment properties. So look inside of these guys first. Let's see what they're about. Right here on their website, they're showing 396 properties of retail space. They have available spaces of 4 in San Diego, and it's expensive to live out in California. Let's see. New York, 0 spaces. Seattle, Washington, 1 space. 1 space. So I want to see available spaces. How many things are open? Okay. Available spaces 4. Operating property. There's 1. There's 1. 1 in Texas. So, Texas, they build up pretty quick. Available spaces 0. So this is pretty big. This is on their whole website. They're showing everything. So, okay, so you see what they're about. That's the important thing is, are people paying rent to these spaces? They're got to pay rent to their landlord. I'm an apartment complex. I pay rent to a landlord. So that's the important thing. Let's check out their revenue. These guys appear pretty strong, to be honest with you. Look, 2014, 537, 569, in millions of US dollars. This looks like 614, 984, 1,120, 1,033, pandemic, 1,016. They're seeing a trend going up. Now, again, this is not financial advice. It's for entertainment purposes only. Disclaimer in the description, but revenue is going up. Okay. People are paying rent. They're huge. They are humongous. And that's what's very attractive about these guys. And even more attractive is their dividend history. So here's 2014, 47 cents. 2015, 48, 50, 53, 58 cents, 62 cents. It hit 62 cents right there. So look, 47. So look, 2013, 46 cents, 2014, 47, 2015, 48, 2016, 50 cents, 2017, 51, 53, then it hit 55, 58, 59, 62.5 cents. So you get significant dividend increases. Even during the pandemic, they were not bad. They still did pretty strong. So that's one thing that's very attractive. I see them as a safe dividend stock, and they have significant dividend increases. That's fantastic. Let's check the next dividend stock. Now, here's a pretty cheap dividend stock. It's less than $40 and it was doing decent against the S&P. Getty Realty Corp. It has a dividend yield of 5.14%, a PE ratio at 18.18, market cap 1.46 billion US dollars. Year range was 25.94 to 34.21. Stay range was 31.87 to 32.34. This is within my price range and it has a 5% dividend yield. That's what makes these guys attractive. And again, let's look into these guys first. So Getty Realty Corp is a publicly traded net lease REIT specializing in the acquisition, financing, and development of convenience, automotive, and other single tenant real estate. So their portfolio: convenience and gas 75%, legacy gas and repair 12%, car wash 10%. So we got some things that are interesting. 99.5% occupied, 71% corner locations, annual base rent 141 million. So these are gas stations. Okay? Top markets: New York, Washington, Boston, Columbia, and Denver. Okay, so here's the thing. They have 1,021 freestanding properties, 36 states, Fitch rated BBB minus, big deal, 2.0 billion enterprise value. So here's the thing. Let's check out their revenue. So over time, they have increased their revenue. 99.89, this is in millions of US dollars, 99.89 to 147. It has increased every year. And again, it's going to take years for electronic cars to happen. Not just going to happen overnight. And usually business owners who are smart adapt pretty easily to change. So they could convert to stations. Now this one, again, this is not financial advice, but these guys can convert to power stations with electric cars. Usually these guys are pretty sharp with what they're doing, and they can adapt to the changes, and all of a sudden they can be new stations for electric cars. It's clear that electric cars are going to be the future, and they're going to try getting these things. So they will adapt to the situation and go from there. Smart businesses do that. These guys know what they're doing. And I'm going to tell you, a lot of these gas companies and everything, they're going to, as well, like BP and Exxon, all them, they'll change their ways as well. But it's going to take a long time for a lot of these companies to change, and usually the real estate investment trust stands strong. So that's one thing. And I'm going to show you their dividend history. 2013, they were 20 cents, 22, 24, 25, 28. They hit 41 cents. And according to these guys, on NASDAQ, they have a 4.83% with a PE ratio 18.24. So they're sitting at 31.92. Kudos to these guys. I really think they'll adapt, and I think they'll do excellent as a company and a real estate investment trust. So I see them adapting to change, and I'm pretty sure they will be okay. Usually the strong business owners and people that have strong business models adapt, unless if you're Sears or if you're Blockbuster. But they're going to need power stations, so these guys, I'm sure, will convert to power. Being a landlord for power stations. Ugh, I can't talk today. All right, let's go to the last dividend stock. And that final stock is Highwood Properties. It's sitting at $46.60. Dividend yield is 4.29%. PE ratio of 18.25. Market cap is 4.94 billion US dollars. Its year range is 36.12 to 48.98. Day range was 46.45 to 47.61. Who are these? I did do a video about these guys. They're headquartered in Raleigh, North Carolina. They're a publicly traded real estate investment trust and a member of the S&P Midcap 400 Index. They own, develop, acquire, and lease manage properties in best business districts in Atlanta, Charlotte, Nashville, Orlando, Pittsburgh, Raleigh, Richmond, and Tampa. Those are big cities. Those are beautiful, big cities. So that's one thing that people really like is a business to go over here. Nashville's huge. One of my friends just moved down there to party, mostly to party, but that's the big thing down there is just beautiful cities that are booming like crazy. I have to show you their revenue real quick. I think I did do a video on these guys. They are on fire with their properties. And let me show you their revenue and their dividend history. Look at this, 2014. This is in millions of US dollars. 555, 604, 665, 702, 720, 735, 736. They did very well during a pandemic. So the other thing is I have to show you their dividend history. It is amazing. Right here in 2013, it was 42 cents. Then it hit 44. Then it hit 46. Then it hit 47. Then it hit 48. And then it hit 50 cents. And it's sitting at $46.60 with a dividend yield of 4.23% with a PE ratio of 18.13. So of the three stocks, I think GTY would probably be my third choice, and that's my stock. These are all stocks to watch too on my list. GTY, just because I still think it's a safe stock, but again, like I said, not financial advice. But I do think, in the long run, there's a lot of things that they have to adapt to. HIW is targets the big cities, the busy big cities, so they're always going to be fine. REG is another one that I think is in really good shape with with all those properties that I showed you. And again, with these ones that are real estate investment trusts that are focused on these, big, rental properties, these complexes and stuff, shopping centers. What is inside of them? How many people are paying rent? That's the big thing. If it's just empty sitting there, they ain't making any money, and they ain't going to increase their dividend. The landlord ain't going to be paying people, getting the money to give to us. And again, real estate investment trust, 90% of what they make goes back to us. So let me know what you think of this video. Which one is your top one? Give me your list. Top 1, 2, and 3. REG, GTY, and HIW. Let me know which one you think is best. And I'm going to post a video tomorrow. I wanted to switch things up a little bit. And, you guys have been amazing on this channel. Make sure you subscribe and hit the notification bell so you don't miss future videos. Got to hit that notification bell, man. I mean, everybody, I get messages on Twitter and Instagram. Oh, did you post that video on that? I said, yeah, I did. I sent them a link, but if you hit the notification bell, you would have found that. So that's one thing I'm just telling you guys. It makes life easier for you. You don't have to do some digging. All right, you guys take care and have a good one. Don't forget to smash that like button. Take care.